Hi, welcome back. I'm Michelle Carolla, realtor here in Madison, Wisconsin, and in Florida. I am joined today with our mortgage expert. There's a lot of talk going on about mortgages right now. This is Brown of Fairway Mortgage. Thanks so much for coming back to the channel.
Yeah, thank you so much for having me.
Now, if you missed him the first time around, you can go back and look at his earlier videos. A lot of great information on mortgages. So thanks for coming back. So right now, all we're hearing in the news is real estate in the market. And it's because we came off of this insanity record-breaking time, and now it's changing, right? We were in a huge seller's market. It's softening, and because of all of these changes, as always, the industry has to answer to that, and especially the mortgage industry, right?
Absolutely. It's a time for us to be a little creative in order to get some great options for both buyers and sellers.
And that is what we're going to talk about today. The option here is for both buyers and sellers, and that's an unusual situation. Normally it favors one or the other.
Absolutely.
So let's talk about these 3-2-1 temporary buy downs.
Absolutely. So a temporary buy down is a way for buyers to get a lower rate. So mortgage rates have gone up. I mean, I'm sure you've heard in the news they've gone up significantly since the beginning of the year. So this is a way for buyers to get a lower rate for their first either 3 years of the mortgage or 2 years of their mortgage. In addition, it's an incentive for sellers to when they're listing their home, an incentive for their buyers. So it's a way to help sellers also sell their homes.
And that right there is a really good point. So there's a lot of things that you said just now that are so fabulous. We're going to need to break those down. So let's first start with the fact that how exactly does it work? Let's use the 2-1 as your example.
Absolutely. So how the 2-1 buy down would work, a buyer would purchase a home and they would lock in the current mortgage rate, but for their first year, their mortgage rate, but their payment would be 2% lower than the current market. So let's say you lock in at 6%. The first year, your payment would be at 4% interest. The second year would be at 5%. The third year, you would go back to 6%.
Okay, and here's the thing about this. This, again, is both benefiting the buyers and the sellers, because let's take it from the seller's perspective first. So I'm a seller. I have a house. The market has softened. I no longer have 50 buyers lined up on my sidewalk waiting to throw me an offer, right? So now we need to get a little creative and get the buyers back in. So from a seller's perspective, what does it do for me, and what do I have to do to make this work?
Absolutely. So what you would do as a seller, you could offer this as an incentive instead of doing a price drop. So in order to get sort of attention when you're listing your home, you usually have to do pretty significant price drops.
Right.
This can sometimes cost less than that. So for example, on a $500,000 house, the 2-1 buy down costs about $11,000. So instead of doing a price drop of $20,000 or $25,000, you could offer this as an incentive for $11,000. And so the buyer, would get that lower rate, and you would be able to sort of net more at closing.
Now think about that. If you are selling a house and the last thing you want to have your agent come in and tell you is that, listen, we're going to need to do a price improvement because it's just not selling. No one wants to hear that. But now with this option, I'm not going to lose as much money.
Right.
And the buyer now is getting something out of it.
Absolutely. They're getting that lower rate for the first 2 years of their mortgage.
That's really interesting. So from the buyer's perspective then, so say you are out there looking for a home and you're seeing that these mortgage rates are so high at the moment, even though historically speaking, they're really, we'll say sort of where they've always been. We just went through a very drastic time, so we don't really want to measure that. But at the same time, I want to put my offer in, and I'm thinking, well, I really would like to have gotten in on those mortgages that were, last year and the year before, but they don't exist anymore.
That's right.
How can I sort of get that benefit, right? And this is a way to do it.
This is a way to do it, and it's really great. So doing this 2-1 buy down, you're going to get those realized savings. So that mortgage savings up front. So if you ask for just a price reduction, it takes 30 years to recapture those savings in that price reduction. Where if you do this, you sort of get those savings in those first 2 years.
So these are big things. When you're talking about numbers and buying a home, it's for most people, it's the most expensive thing they will ever purchase. And when you're at that level of number and you're able to save, that's real, true savings.
It is real, true savings. Absolutely.
Now, if you are from the mortgage side, there's really no disadvantage either, because they're still going to get that exact dollar number that they're expecting for that loan, right? How does that work?
Absolutely. So how it works, so at the time of closing, the funds to offset, sort of get that lower rate, are put aside into escrow. And so every month when you make your payment, Fairway will contribute sort of the difference to make up that difference in the mortgage payment. So in real life, in actuality, your loan is locked at today's rate. Your payment is just lower for those first 2 years. Most people are expecting mortgage rates to drop pretty drastically come this summer. They're supposed to go back down into the fives. So if you were to refinance, the thing that's really great about the 2-1 buy down is those funds are set aside in escrow. And so at the time of refinance, they would be applied towards principal. So they would sort of offset any balance you have on your primary mortgage.
Really, this is so much positive there,
Absolutely.
right? It really is. And the fact that the buyer isn't depositing that in escrow, it's the seller doing it.
Mm-hmm.
So that's really something from a buyer's perspective as well, right?
Absolutely. And if you're looking at a property that's sat for a particularly long time, or you feel it's particularly overpriced, we also have the option of doing the 3-2-1. We talked today mostly about the 2-1, but the 3-2-1 it is 3% down for 3 years. So it's actually savings over 3 years versus 2. So if you're out there looking at a home that's been sitting for a while, that's also a great option for you.
Okay. Good information for agents out there, good information for both sellers and buyers, right?
Absolutely.
So are there any disadvantages that anyone, like the pros and the cons? You know, we see so many pros here. Are there any cons with this at all?
I don't see any. It's actualized savings. Most people would prefer to save money now versus 30 years from now. So this is a great program for that. And this is a great way for sellers to sort of offer an incentive to buyers to come buy their house without doing drastic price improvements.
And the fact that, a lot of people in today's society, we don't sit in our homes for 20, 30 years
That's
any
right.
longer, right?
That's right.
So if you're getting it at a high rate and you maybe need to sell in 2 years or so and you haven't refinanced and you're still paying that high rate, this is a really good option.
Absolutely. The funds will always be applied to principal, sort of in any scenario, either through making payments or through refinance or sale. Every penny of the buy down goes towards principal of the house eventually.
Which is, when you're getting ready to maybe sell in 2 years, say you have a job transfer or whatever, or you just, you're upgrading and you're selling in 2 years, then all of that's going to come back multiple fold, right?
Absolutely. Yes.
Okay, well, this is really fantastic information. Of course, Ryan is always available to chat. I'll put all of his contact information in the description below. But again, you're so full of information. We're going to have you back, I know, again. And then go back and look at his previous videos on mortgages. And we talked about interest rates, and we've talked about a lot of things so far. So get that information if you're out there shopping for a home, and if you're getting ready to list your home. It's all great information to have as far as marketing. It's a super marketing tool, right?
Absolutely. That's what it was designed for, to help people sell their homes and help buyers get better rates. So.
Okay. Oh, that's a win-win. I love
Win-win.
that. That's a perfect way to end the day.
Yes.
That is a win-win for everyone. Well, thanks so much for joining us again. Thanks, Ryan, for being back on.
Thank you for having me.
And as always, thanks for watching Living in Midwest Life. And if you haven't subscribed yet, please do so. Hit that bell for the notifications, and we'll keep you updated on those weekly videos that come out every Friday at 4 p.m. Central. See you next time.
Bye.